Hey guys, welcome back to the channel. Now, I know it's been a long time since my last video, and I do apologize for that. I know a lot of you have been asking when my new videos are going to be coming out. I've basically just had a really busy year so far. I was traveling in Australia during sort of February, March, and the start of April. I took a bit of a break from trading during this period. I was sort of looking here and there at the charts, but I wasn't really taking it properly, as I would say. I was spending that time traveling around the country with friends, so making the most of that. Since I've been back, I've actually accepted a job. So I am moving to London. I will be continuing with my trading. The only difference is that I'm going to be moving away from my SMC strategy, which, if I'm going to be completely honest, probably wasn't as refined as I wanted it to be for my trading, especially not with my sort of prop firm accounts. And I was sort of doing a break-even dance with these two strategies at the same time, that being the SMC strategy and then my sort of swing price action strategy you're going to see today. So I had a sort of long period this year of sort of doing the break-even dance. I know that's not a bad thing. I know lots of traders will experience a break-even dance, and it's actually not a bad thing, especially if you're not losing money. It's actually a sign of, patience, especially in the market. I think for this strategy as well, this 1 hour strategy, we've had a fairly slow year as well. Obviously, I was away for part of it and there were some good trades there, but overall, we've had quite a lot of range bound price action. This strategy sort of feeds off strong trending markets. So it has been a bit of a slower start to the year. But last week, which is the week we're going to go through today, we had some really, really nice, strong trends. We were able to take a lot of positions. I think I took about 5 trades last week. They were all winners. There were actually 2 other trades that I missed, unfortunately. As I'm saying, the 1 hour strategy I'm going to be continuing with because I feel like it's manageable when I'll be starting that new job in London. The SMC strategy on the lower time frame, I can't really do that. I won't have the time for it. And as you can see, as I'm saying, I was away this week on holiday in the south of France. But I was still able to, keep on top of the charts. Max I would ever need to look at them is on the end of every hourly candle. And yeah, I was able to really, take advantage of the trending markets this week. I was able to pass 4 different challenges I had going. As I said, I was doing a break-even dance. So some of these challenges I've had open for quite a while, and I will show you that towards the end of the video. But a really, really nice week. I think with all the trades taken, not including the missed trades, there was about 25% of profit if you're using that 1% risk management. So a really, really strong week, and I'm going to be going through all of the trades in this video. So be sure to stick around. I'll be going into, how I got involved, what I was looking for, and how we took those profits. And yeah, for all of you that have stuck around during this time, when I haven't been releasing these videos, I really appreciate it. And I'm hoping that I should be able to start releasing videos more often. If you like videos like this, where I'm reviewing week's price action or perhaps forecasting the upcoming weeks, let me know in the comments, and it's something I'll try and do a lot more regularly than I have been doing. I think that's everything I needed to get said before this video. So without further ado, let's jump straight into the analysis. So starting with our first pair on my watch list, it's Euro US dollar. And coming into the week, we had a very clear range forming. Actually, you can see we pushed to the downside. We then broke our high correctively, broke the low correctively, broke the high, broke the low, broke the high. When we see price action like this, we know there's a very clear range forming. And at this point, I was simply waiting for a strong impulse or trend to form in either direction. You can see we got a really strong bearish push to the downside, and I was looking for a setup within here. As you can see, we did have a nice retracement, but for a flag setup, I was looking for price to make this internal high here. We made our internal low, and then I was looking for price to break our internal high to create a higher internal high. I know it sounds a bit confusing, but it's basically just this setup here. I would then wait for the bearish candle to get involved. As you can see, we never actually broke above that high, so there was no valid entry there. We then broke to the downside rather correctively. We retraced straight away. Again, broke the high, broke the low, broke the high, and then we formed a clear range since. Again, not looking to get involved in range-bound price action. This strategy works off trends, and when we don't have a clear trend, we're simply not getting involved. And as you can see, we broke the high, again, broke the low, broke the high, and we've been ranging since. Coming into this week, we can see we're beginning to break to the downside. We've had a fairly large wick on this small impulse, continued, large wick again, fairly aggressive retrace. So I'm not going to be looking to get involved here tonight, especially not on any flag formation. Ideally, I'm just waiting for a very strong impulse to the downside or to the upside, wait for that clear trend to form, and then I'll begin to look for those sort of continuation setups. Now, moving on to AU, we had some really, really nice trends last week, and I was able to take a 7.7% winning trade. It was a really, really clean setup. It fit my plan perfectly, and I'll take you through that setup exactly. But one thing I want to note first is we did have a setup earlier in the week that I missed. Unfortunately, as I said, I was on holiday in the south of France. I was checking the charts when I could, but when this setup formed, I was simply out. I think I was at dinner at this point. And then I went to bed afterwards. Again, I just wasn't able to get up at this time. If I was at home, I probably would have been paying closer attention to this setup forming, but we can go through it anyway. I have marked it under my missed trades here. So we will just get rid of that trade first, and let's rewind price action so we can see what happened. So coming into the week, you can see we had this sort of descending channel forming where we had those corrective breaks of the most recent low. Tried to break to the upside, but that failed, and we then pushed to the downside. And we did then have a fairly strong impulse here. A moderate wick. I'm not going to say it's a very large wick, but it was a warning sign. And at this point, we basically want to see, at least for my checklist, I want to see a very weak retrace with no clear shift in momentum. Or if we do see a bit of a moderate initial retrace, I want to see a clear range. Now, as you can see, we had this internal high form. The very next candle, we had this small sort of internal retracement candle, which formed our internal low. Next candle broke above, formed that internal high. We were then just waiting for a bearish candle to get involved, which came on the very next candle. Your entry would have been here about 8 p.m. on Monday. As I said, I was out at this point, so I wasn't able to get involved. I would have been using a 12 pip stop loss. And if we zoom out, we can see that that trade was really, really nice. Again, using that trailing stop loss, so we're maximizing profits in a trending market. You can see you would have been taken out for a final profit of 9.32%. So a really big trade. Annoying that I did miss it, but as you can see later on, we did get another valid setup, which I was able to get involved in. And again, 7.7%, I'm not complaining about that at all. And a very similar setup. I'll just rewind price action so we can see it a bit. And what we had was price continue to the downside. Obviously, after that original setup, we then had, a small impulse, I'd say, but we are in this really strong trend now. So I was happy to be a bit more lenient with these impulses. We had that very weak retracement on the initial candle. We then had another inside bar. So that meant we had our internal high in place, our internal low in place. We then saw price break above, and we got that bearish candle. So I was happy to get involved straight away. Only warning sign really was that we closed fairly close to the low, but there was enough time for us to be able to, enough space for us to be able to reduce our stop loss and our risk if price did continue to the downside. So I was very happy to get involved in that. And as you can see, the next candle, we were able to reduce that risk, and we then did continue to the downside. The trend continued fairly correctively. And at this point, we were simply trailing our stop loss to lock in profit. And as you can see, we then got a really nice push to the downside, and this trend continued for some time. Simply using that trading stop loss became increasingly corrective here, and we did, price did eventually take us out around this level here as we finally reversed. Again, when we see that descending channel with these corrective breaks of the most recent low, typically what we see is price reverse to the upside, usually with significant momentum, and that's exactly what we got here. So taken out for 7.7%. And very quickly to note, there was actually another trade that I missed. It was a scaling position. And if I just highlight it here, you're going to be able to see it was when we were pushing to the downside. Yes, we were very corrective, but when we're already involved in positions, we've got a lot of profit locked in, and especially on pairs like Aussie US dollar and Aussie Japanese yen, where we know we trend correctively, we can be a bit more aggressive with our entries. You can see we had this small break to the downside. If I just get rid of this original position, small break to the downside, that's very weak inside bar retracement, clean continuation, and then an entry on a retag to our most recent low, which was that inside bar. I wasn't able to take this setup simply because at this point, with the other trades I had running, as you'll see in a second, I was closing positions simply to pass these different challenges that I had open. I was also then changing accounts, logging into those phase 2 accounts. So I simply just didn't have enough time to get involved here, but it was a very valid setup. And as you can see with all of these trades, if you were able to take them all, you would have banked, some really, really nice profit on AU alone. But if we move on, we're going to be able to see there were a lot of other opportunities on the other pairs as well. So not to worry if you did miss a couple trades there. But again, when we see this really high probability trending market, we want to be a bit more aggressive, especially for me on pairs like AU, where we can trend correctively for quite a long time. As you can see, we've been trending bearish for, since the end of last week, really, possibly even the start of last week. So really high probability price action. And we will move on to EJ now. Now on EJ coming into the week, again, we had a nice bearish trend forming. Arguably not the cleanest at the start. We had this sort of large break, but then a fairly significant retracement. Price then continued to the downside. We had a very small retracement. And if I play this back to you, I will show you how I got involved. So at this point, I would say we were beginning to see a trend, arguably not the clearest. We had this sort of range-bound price action, but we then saw some fairly significant momentum to the downside with this impulse. A very weak retracement here, showed no sign of a shift in momentum. And we did break to the downside, and I was looking to see if we could get a clean close for entry, but you can see the first candle ended with a wick, second candle ended with a wick, so I was still waiting for more confirmation. But the very next candle, we had a really clean close. Yes, we required a fairly aggressive retrace to get involved on the tag of that most recent low, which was our inside bar candle here. But I was willing to take it, especially on the EJ. I know we can have aggressive retraces when we're trending. So again, I was happy to get involved in there. You can see we got tagged in on the very next candle, which was an inside bar, and we then continued to the downside. So we're able to reduce risk straight away. Price continued to the downside. We broke our most recent low. Again, continued fairly correctively with these corrective breaks, and we were then taken out for a very small profit. Sorry, not very small. It was actually fairly decent. I don't know why I was saying that. It just looks smaller compared to the recent price action, but 3.31%. So a really nice trade. And again, taken out once that trend was showing signs that it was going to end. A bit frustrating, arguably, because we only had a very small reaction before we continued to the downside. At this point, again, I was looking to get involved, but you can see we had a small retrace, corrective break, a very corrective break again with this large wick, not able to get involved. We were then looking for a possible bomb here, but we had this internal high form, we had our internal low form, and then here we saw three sort of bullish candles. This showed a possible shift in momentum for me. I therefore wasn't looking to get involved in the setup here, but it actually would have been a sort of really nice bomb setup if you did take it. Again, very, very small stop loss if you are using around a 12 pip stop loss. In relation to recent price action, that looks very small. So again, a bit of a warning sign, but you would have been able to lock in really nice profits of 8%. But that didn't really fit my plan. I'm not really considering it as a missed trade, just because we had that sort of sign of a shift in momentum on the break of our sort of bomb line, if you want to call it that. And then otherwise, we reversed to the upside, possibly looking to get involved in longs as we broke to the upside, as we had this fairly corrective descending channel form, but we then broke the high correctively, have since broken the low correctively, and we're now in this very clear range. So coming into this new week, I'm simply just waiting for a strong impulsive move in either direction. Hopefully a clear trend can form, and yeah, we'll look to get involved again if the price action shows that it wants to trend. Now, moving on to AJ, which is our next pair on the checklist. And there were actually two very nice trades I was able to catch this week, and we will go through both of them first. So let's just hide that second one. And again, very similar to EJ, very similar to AU. Coming into the week, we were beginning to see some really nice trending markets. We had this sort of break to the downside out of this range up here. So you can see breaking highs, breaking lows, clear range bound price action. Began to see some momentum, fairly small retracement here, continued to the downside, arguably a bit corrective as we retraced straight away. But we then got a really nice impulse. And again, this is a very similar setup to the one we took on EJ. I think it occurred at around the same time. We had that impulse, we had that weak retrace. I was simply waiting to see if we could get a clean close below our most recent low. First candle had that wick, which was a warning sign. Then our second candle continued to the downside. We actually had a nice rejection candle to the upside and a clean close. I was happy to get involved on a retest of our most recent low. Again, 12 pip stop loss, tagged in on the next candle, fairly aggressive retrace, especially with how small our stop loss is in comparison to recent price action. But we did continue to the downside and again, continued fairly correctively until we were taken out for a 1.5% profit. So smaller trade compared to the other ones. Again, slightly frustrating, as you'll be able to see. We do sort of just get tagged out before price continues, but not to worry because we were able to get involved in another really nice trade. As you can see, our bearish trend was continuing to the downside. We had a weak retracement here, but there was no flag. As you can see, we had that impulse, we had our internal high form, we had our internal low form, but our internal high was never broken. We'd needed the price to break up here. Never occurred. Price continued to the downside. And then what we got here was the flag formation we are looking for. We have that internal high, we have that internal low form, internal high is broken, and we get that bearish candle for entry. And this was where I got involved, 12 pips stop loss. And you can see, again, fairly small in comparison to recent price action, but that's only a warning sign. I was very willing to get involved here. Again, we had a large wick, which was probably a warning sign again, but very weak retracement, no shift in momentum for me. So that fit my plan perfectly. And you can see we continued to the downside, really, really strong impulse here. Weak retracement continued, became a bit corrective before we reversed. I'm able to lock in 12.47% here, which was a really, really nice trade. And this was sort of the main trade that helps me get to those profit targets on those phase one accounts that we will come to in a second. We did reverse to the upside. I'll just hide this now. Coming from a fairly corrective descending channel, arguably fairly strong trend, so not the cleanest descending channel. But I was looking to see if we'd continue to the upside, but again, very similar to EJ, broke to the upside correctively, wasn't really seeing any signs of a clear trend, and we've now formed a clear range. So coming into this new week, I'm simply waiting for a strong impulsive break in either direction, wait for that trend to form again, and then hopefully see if we can get any more continuation setups. Now moving on to GU, which is our last pair for the week. And I did take one trade, but technically this was at the very end of last week. As you can see, this was taken on Friday around 3 a.m. But I thought I would go through it as, again, this trade helps me reach those profit targets on my challenges. And I think it'll be quite useful to go over this setup. If we rewind price to where we got involved, we can see that last week we had this really strong impulsive move to the upside. I was looking to see if we could get a flag formation, but you can see this very clear shift in momentum. Wasn't looking to get involved at this point. Sort of corrective price action in the range, but we then continued to the downside with some fairly significant momentum. As you can see, we had these strong sort of 3 candles. We did have a wick, which shows that we would possibly reverse. We might not continue to the downside, but you can see we then had this fairly weak retracement, and we then had a really, really clean break to the downside. This showed to me the price was ready to continue. We'd had that impulse, we'd had the weak retrace, and we'd had a really strong continuation with a clean close. So I was happy to get involved on a retracement to our most recent low. As you can see, a 21 pip stop loss, as our stop loss is quite a bit larger on GU. Next candle, we were tagged in, and price did continue to the downside quite impulsively. We then saw a very large range, and this was where I was sort of waiting for price to make up its mind. This is where you've really got to show that patience, especially with this strategy. As you can see here, we would have had our stop loss just above our most recent high. So we would have been at reduced risk. And you've obviously just seen price go sort of 2% in profit. You're thinking, oh, should I close early? Price is clearly ranging here. Maybe I'll close when it comes back down. Maybe I'll move to break even. Just follow your plan. Here, obviously, I'm using the trailing stop loss. So I waited for price to continue to the downside. Fairly corrective break with that large wick. We had this retracement, and we eventually continued to the downside correctively. Again, large wicks when we're breaking, retracing straight away. We then broke to the upside, and we were taken out for that 2.11% sort of midway through this week on Wednesday. So this, again, compounded onto those profits on the other pairs that we've been through. Technically a trade taken last week, but I thought I would go over it, just for the benefit of you guys. And otherwise, there wasn't a trade I took on GU this week. Fairly range-bound price action, arguably forming this larger descending channel, but you can see we were breaking lows, breaking highs, breaking lows, breaking highs. large retracement, breaking low, breaking high, breaking low, breaking high. Really not any clean price action, not a clear trend. At the start of this week, we have continued to the downside, but we've retraced very aggressively. Clear shift of momentum here, sort of forming this V shape. Again, I'll just be waiting for much cleaner price action to form before looking for trades this week. Ideally, we get a strong push in either direction, wait for the trend to form, and then look for some form of continuations. Now, apologies if I sped through that at quite a fast pace. I was just trying to sort of reduce the time of this video. I know my videos tend to go on for around 40 minutes or so, and that's quite a while. It's quite a long time for me to be talking about the setups as well. But hopefully you found that useful. And I'll quickly just jump into my actual challenges now. I'll show you how they went, which ones I was able to pass, and the sort of journey that I'd been through. Some of them, as you're going to be able to see, were open for quite some months. I think there was one of them that I even started last year. So, as I say, took 2 months off trading, did the sort of typical break-even dance as I was trying to manage two strategies that arguably I was sort of trading both mediocrely, and I should have just been trading one as sort of expertly as I could have. That's what I'm now focusing on. That's this strategy here. And that's the strategy that I'm going to be focusing on more on this channel. And as I mentioned, I will try and do more of these weekly recaps and weekly forecasts in the near future. But let's jump into those accounts. Let's analyze some of the data. And yeah, thanks for watching. So guys, here you can see one of the accounts that I passed this week. And I thought I'd start with this account because it's probably the most embarrassing one really for me to go over. As you can see, I started this challenge on the 21st of July last year. So it's taken me a year to complete this challenge. And as you can see, I've come very close on several occasions to the max drawdown. And if I can explain this in any sort of way, is this was just me being irresponsible, really. I was experimenting with a new strategy. I was moving into the sort of SMC space. I thought I knew how to trade it. I had backtested. I backtested actually several years worth of price action, but I was trading the M1. It was something I was very new to. Obviously, having moved from the 1 hour time frame, everything moves very fast. My psychology was all over the place. What would happen is I'd have a few good trades on my swing account, and then I would take, like 10 losses in a row trading the SMC strategy. I'd maybe get one win, which would boost my, sort of ego, my confidence again. And then, as you can see, I'd take a huge string of losses. It was sort of around this period here that I decided to sort of get rid of my SMC strategy, or at least move it to a completely separate account. I'd been trading this for so long, something clearly wasn't working. I had to analyze that. I spent a lot of time doing some sort of self-reflection, and I told myself that I can't keep continuing with that SMC strategy when I know it's hindering my performance, especially in these challenges. So around this point in February, as I said, I was in Australia. I took some time off trading. I did take a few trades here and there, but there really weren't that many. And this is where I was more doing the break-even dance. As you can see, I'm not making any big profits here. I did take a string of losses here also, but much more sort of consistent, at least than the previous not price action, but previous areas on the chart here where you see I have these really sustained periods of drawdown before maybe a few arguably lucky wins, which sort of saved me from my account getting terminated. And then you can see here at the very end, this is this week here where we had these huge trades, really nice trending price action. I was able to get the profit target. As you can see, I actually went quite a bit over the profit target when I woke up in the morning to close my trades. But yeah, as I said, a really, really long experience. I didn't blow it, which I guess is the one positive thing I can take from this. Showed a lot of patience, showed a lot of determination to not give up, to not change my strategy, although obviously I did end up getting rid of one of them. I will arguably come back to the SMC strategy in the future, probably trade it on a higher time frame instead. But yeah, a very, very long, painful experience here, especially after around this point. Maybe it was in sort of September of last year, I think, was when my Forex funds shut down. So that was when I lost my funded accounts. Again, probably added to that psychological impact, really struggling to just get my head around trading. Lots of times felt of not necessarily giving up, but you feel like you're there and then you get dragged back. It's quite hard on your psychology. But again, this just shows stay patient, stay true to what you know, stay true to what you've tested the most. And in this case, it was that it wasn't the SMC strategy, it was my price action strategy. And once I decided to focus on that, when I sort of came back trading in sort of May, really, I did take a string of losses, but they were fine. They all fit my plan. And we then got some really nice trades and we were able to pass it. As you can see here this week, we had those really, really strong trades, which led us to pass that challenge. High stakes, phase 1, now moving on to phase 2. Now, this next account was also a high stakes phase 1. This time was on a 5K account. And I actually started this again quite a while ago. If we go back, it was November the 2nd, so the very end of last year. I sort of put a message in the Discord server. This was when I was sort of giving out those free signals and also paid for signals. I said pretty much, at the very end of last year, I'm going to start a new 5K account. I'm going to record all of my trades. As you guys will know, considering I haven't posted in a long time, that didn't happen. I obviously went traveling, as I've mentioned. I took some time off trading and I was in this sort of sustained drawdown period. I did, again, get fairly close to the stop out level. As you can see, that was 4,500. And I came fairly close to that. Never that close. I was using a 0.7% risk on this account. And again, when I came back in May, we had those trades, that sort of series of losses. But then we had that really nice spike at the end. Again, showed sticking to your plan, sticking to what you know, using the right risk management and trusting in the process. Again, I know this is sort of looking like a bit of a fluke here. Arguably, it could be. Really, it's just this year was quite slow. I took those periods off where I wasn't really trading. And we just didn't have that trending price action. Whereas now, when we waited for it, we remained patient. We're able to get, that huge profit, over 25%, as I said this week, if you would have taken all of those trades. So a really nice account. Again, you can see those sort of 5 trades there. Really nice profits, again showing that sort of consistency. And I will move on to the next account. And my next account was actually a bootcamp. This was the 5K, so this is a phase 1 of the 3-phase bootcamp series that the Fivers have. Obviously, as you would have been able to see, all of these accounts so far have been with the Fivers. They are my preferred prop firm. Don't have anything bad to say about them at all. You can get 5% off a challenge or account if you would like. I'll leave that link in the description. Bootcamp, I think, is really good. You do have to use sort of less risk on each trade because there's slightly tighter rules. But I think it's really good for enforcing that sort of consistent trading. As you can see, this account was much more sort of obvious with the break-even trade. Break-even dance. Messing around sort of here in drawdown for a fairly large period, again, showing my patience, simply waiting for price to show those right moves. And again, we had that really nice move this week, which led to those profits. Didn't have this one open as long as the others, still January 9th. So a good sort of 6 months again, trading, not trading for 2 months, coming back, having some losses, and then simply waiting for those really nice high probability entries in those trending markets. I'm now moving into the phase 2, which will be a 10K. There'll then be a phase 3 before you get that funded account. And I will try and keep you guys updated with how that phase 2 goes. And the same being said for all of the other accounts I've shown you. And then there's one more account which I'll show you, which is actually with a different prop firm. Now, this account, as you can see, is with Alpha Capital. This is a new prop firm that I've just started trading with, really. I think as you can see here, I actually started this on the 14th of May. So I think this was the date actually where I'd come back from holiday. I'd had some time to reflect. I'd finished a new round of backtesting on my strategy. I'd refined my checklist, and I thought, I'm going to start a new account from the beginning as a 10K account. This was my phase 1. And as you can see, again, we had those sort of losing trades during May, sort of doing a little break-even dance, nothing too worrying in terms of drawdown. And then we got those really, really nice trades this week. As you can see, we did have that account passed, literally just hit the profit target of 8%. I've now got that phase 2. And again, I will keep you guys updated on this Alpha Capital group. It's a prop firm I've heard good things about. It was one recommended to me by someone else that I've sort of know in the trading community. And if you guys would like, I will continue to keep you guys updated with my phase 2 and also how I find Alpha Capital as a prop firm in general. So far, no issues at all. Spreads have been good. Commissions are sort of what you'd expect. So no issues at all. Again, pretty similar sort of story compared to the other challenges I've shown you. As you can see here, actually, we had 16 trades on this account. We had a win rate of 33.75%. Largest profit was 490, average profit was 229, and our average loss was 69.6%. On this account, I was using 1% risk, so I was being slightly more aggressive than my other accounts. I probably should have mentioned that whilst I was on them. I sort of tend to use between, I think, a 0.35% risk on my bootcamp challenges, and that's mainly due just to the tighter rules they have. And I think my 20k evaluation, I was using 0.5% risk. My 5k evaluation, I was using 0.7% risk. And this account, I was happy to be a bit more aggressive with to try and get that sort of quicker pass, especially considering how long my other challenges had taken me. Trying to be a bit more aggressive, still not that aggressive with only 1% risk. But yeah, very happy with that, very happy with how it turned out. And that pretty much brings us to the end of the video. So thank you guys for watching. Thank you for sticking with me, especially when I haven't been posting that often. And as I've told you, let me know in the comments sort of how you felt about this video. And I'm going to try and start recording these and uploading these on a much regular basis. Yeah, have a good week, guys.